Discussing the housing market, stocks, home prices, mortgage rates, rental rates, and overall market conditions in 2023 is crucial because this year's housing market will be unlike any other. If you've been following the economic trends or have any interest in making a real estate move this year, then you know just how much things are shifting. Whether you're a potential buyer, seller, or investor, understanding the market dynamics will help you make more informed decisions. To find out exactly why 2023 is set to be different, keep watching and don't forget to like and subscribe to our channel for more updates. Let's dive in. The housing market in 2023 is expected to see some improvements, though with caveats. Experts predict that inventory levels will increase to a healthier range of about 2 to 2.5 million active listings nationwide, compared to the current 1.28 million available homes at the time of recording this video. The housing market has struggled with tight inventory for some time, making it a difficult environment for both buyers and sellers. A more balanced supply of homes should help alleviate some of the pressures that have plagued the market over the last couple of years. But before we go deeper, it's important to recognize that real estate transactions are typically influenced by life circumstances more than monetary factors. While many economic experts may view housing markets through a financial lens, the reality for most people is different. The decision to buy or sell a home often stems from life events, divorce, health issues, relocation for work, or the desire to be closer to family. These personal circumstances often outweigh broader economic considerations. As a result, real estate isn't always about the bottom line for many people. It's about what fits best with their life's needs. Despite the economic challenges, the U.S. housing market is expected to see between 1.8 million and 2 million active listings across the nation in 2023. But how do we know when is the optimal time to buy or sell a home? Long-term charts of home prices can reveal these patterns, but they don't necessarily take into account the real opportunity cost of time. Real estate speculators often overlook this aspect when they recommend buying or selling based on current market conditions. The true cost of waiting can sometimes be more significant than the fluctuation of market prices. For example, some investment gurus might present a safer alternative with higher returns, but they often assume certain conditions that may not apply to everyone. These include the assumption that the person has enough cash to invest, the ability to maintain a roof over their head, and a comfort level with taking on certain financial risks. These factors are important to consider when deciding whether real estate is the right investment strategy for you. That said, when it comes to the housing market, we still expect home prices to fall to more reasonable levels, aligning with what the average home buyer can actually afford in a given area. Unfortunately, even with these potential improvements in inventory, there are still significant challenges ahead. One of the biggest factors affecting the housing market in 2023 is inflation, which has hit the highest levels since 1982. The extreme demand for goods and services, coupled with supply chain disruptions caused by the pandemic, has made it difficult for many to afford new homes. This inflationary pressure also extends to other sectors of the economy, making it harder for potential buyers to save enough money for a down payment, much less afford skyrocketing property prices. To combat inflation, the Federal Reserve has been aggressively raising interest rates. But much like an inexperienced driver jerking the wheel to correct a course, the Federal Reserve's actions in raising rates may be doing more harm than good in the short term. While it's necessary to rein in inflation, the sharp and sudden rate hikes could end up derailing the economy into a deeper recession. The key for the Fed is to find the balance between curbing inflation and avoiding a severe economic downturn. This delicate balance is what many economists are watching closely. Mortgage rates don't always follow the Federal Reserve's actions directly, but in 2022, there was a clear correlation between the Fed's rate hikes and the rise in mortgage rates. If this trend continues into 2023, we may see mortgage rates climbing higher. As of the time of recording this video, the Federal Reserve's benchmark rate is between 3% and 3.25%, which directly influences short-term borrowing rates. If the Fed continues its aggressive stance in 2023, the mortgage rate could rise to 9% or even 10% by the end of the year. To put this in perspective, The average mortgage rate in 1990 was 10.13%, and it had dropped to 6.94% by 1998. If you are currently on the fence about buying or selling a home in 2023, you're not alone. Many people are wondering whether it's worth waiting for mortgage rates to decrease or for home prices to stabilize. Unfortunately, there's no crystal ball for predicting exactly when this will happen. Property prices and mortgage interest rates will inevitably fall at some point, but the timing remains uncertain. The question for most homeowners is, when will that happen? Now, let's take a look at renting. If you're a renter or thinking about renting, there are also market forces to consider. For example, if you're living in Dallas, rental rates are expected to rise by 5 to 7% over the next few years, though a slowdown is expected in 2023. Currently, the average rent for a two-bedroom property in the U.S. is around $1,845 per month, a record high for the industry. Renting may seem like the more affordable option, but rising rent prices can be just as frustrating as high home prices, especially for renters who are already stretched thin. For those who can afford a home but prefer to wait for better market conditions, the decision to hold off on purchasing is understandable. The real estate market is like a roller coaster. While some may see opportunities, others might feel that those opportunities are slipping away. The bottom line is that you should buy or sell a home when the time is right for you. Factors such as your stage of life, job stability, family needs, and personal goals should take precedence over trying to time the market perfectly. The truth about real estate is that timing can be tricky. If you're a buyer, it's important to have a clear understanding of your financial situation and market conditions before moving forward. Discuss your options with a realtor who understands the current market dynamics and can help you make the right decision. Also, don't forget to consult with a loan officer to find out if there are any special mortgage programs or rates available to you. Sometimes these programs can make homeownership more affordable than traditional refinancing options. No matter your situation, whether you're buying, selling, or renting, navigating today's dynamic housing market can be challenging. The 2023 market will be shaped by many forces: the continued volatility of mortgage rates, inflationary pressures, supply chain disruptions, and shifting inventory levels. And for many, the right time to buy or sell a home depends less on charts and trends and more on personal circumstances. In conclusion, it's clear that the housing market in 2023 will be a challenging one, but with careful planning and consideration, it is still possible to make the right decision for your future. Whether you're waiting for better market conditions, purchasing your first home, or simply trying to weather the storm, taking the time to educate yourself on the current economic landscape is key. We appreciate you for watching today's video and hope this information has helped you better understand what's happening in the housing market. If you found this video helpful, please give it a thumbs up and subscribe to stay updated with the latest news. We'd also love to hear your thoughts. Let us know in the comments section how you're approaching the housing market in 2023. Thank you again, and we'll see you in the next video.